Americas displayed a mix of red and green today, reflecting an uneven investor sentiment. In the United States, major indices like the Dow, S&P 500 and Nasdaq all closed lower, with the Dow experiencing the steepest decline, shedding over 150 points or 0.36%. The tech-heavy Nasdaq fell by 0.16%, while the S&P 500 saw a more moderate loss of 0.22%. These declines suggest caution among investors amid ongoing concern and economic uncertainties with potential policy shifts. Meanwhile, small cap stocks represented by Russell 200 showed resilience, ticking up 0.07%, a possible indicator of localized confidence in smaller US businesses. North of the border Canadian market brought a brighter tone to the region, with S&P TSX Composite climbing 0.69% and the S&P TSX 60 up by 0.60%. This could point to strength in commodities or positive domestic developments. However, South American market painted a different picture. Brazil's Bovespa plunged by 0.66%, shedding over 780 points, a significant hit possibly linked to volatile commodity market and prices or political uncertainties. Chile's S&P IPSA and Mexico's S&P BMV IPC, however, registered gain of 0.18% and 0.51% respectively, highlighting localized investor optimism. Overall, today's trading reflect a cautious but divergent global market outlook, with the Americas caught between contrasting economic forces. Investor will likely focus on oncoming and the economic data and the central bank decision for further decisions to be taken on the market side. WTI crude oil climbed 0.60%, closing at $73.57, and Brent crude oil followed the suit, up by 0.38% to settle at $76.22. These gains suggest renewed optimism in energy market, possibly driven by tightening global supply or geopolitical developments. Despite these modest gains, both benchmarks remain well within their 52-week ranges, indicating a period of relative stability. Natural gas, however, was the notable outlier, dropping sharply by 3.72% to $3.03. The significant decline could reflect warmer weather forecast or weaker than expected demand, which continues to pressure prices. In precious metal, gold retreated by 0.26% to $2,662, while silver fared better, rising 1.40% to $30.32. Divergence suggests the investors may still see silver as a short-term hedge or an industrial play, even as gold struggles with higher yield and a stronger dollar. In agriculture, soybeans dipped slightly by 0.64% to $10, signaling minimal volatility in the broader agricultural sector. Seasonal trend or steady supply dynamics could explain the minor decline. However, today's commodity trends highlight a tug of war between the energy sector's resilience and the downward pressure on the other asset classes. Investors will likely keep a close eye on macroeconomic factors and global demand shift to gauge future market movement.